Here's the trap. When you work at a company, you know the story better than outsiders. And that can be super valuable. It can also create bias because the market does not reward belief by itself. Over time, it rewards durable business results, cash generation, and per share value creation. So this is not a question of whether NAVN is exciting. It may be. The question is, does NAVN deserve to remain a concentrated part of a family's financial future? And that is the Buffett and Munger question. So let's start fairly. NAVN is not an empty story by any means. It's trying to simplify business travel, expenses, corporate cards, payments, and reporting in one integrated platform. And that has value. The company has shown strong revenue growth and gross margin is attractive. The balance sheet actually gives the company some time and management is working towards better operating leverage. So the bull case is understandable. There is a real product, real customers, and a real reason investors are paying attention. But Buffett and Munger would not stop at revenue growth. They would ask, what is the moat? Where is the durable cash flow? Where is the per share economic value? That is where the analysis becomes a little bit more cautious. And NAVN is still GAAP unprofitable. Sales and marketing spending remains very high. And stock-based compensation and dilution definitely matter as well. And reported free cash flow is encouraging, but it should be evaluated alongside stock-based compensation because shareholders ultimately care about per share economics. A company can grow while each shareholder slice improves less than expected. And that does not make NAVN as a bad company by any means. It means the company is still proving itself as a public stock. Now, let's talk about moat. NAVN may have a moat forming around workflow integration, and if a company uses NAVN for travel, expenses, cards, policy approvals, reporting, and reconciliation, switching could become painful. That is a potential advantage for the company. But this still is a competitive market. NAVN competes with travel, expense, corporate card payment, and spending management platforms such as SAP, Amex, GBT, Agencia, Ramp, Brex, Expensify, and TravelPerk. That does not mean NAVN cannot win this game. It means the burden of proof is just higher. And the company needs to show it can grow, improve margins, reduce dilution pressure over time, and build a durable advantage. Based on currently available public information, NAVN does not appear to offer an obvious Buffett-Munger style margin of safety yet. That does not mean the stock is bad. It means concentrated exposure should be intentional, not automatic. And here is the scenario framework. Bear case, good product, disappointing stock. Base case, improving company, still proving itself. Bull case, category leader with durable margins and cash flow. The bull case, it's possible, but it is not guaranteed. And a family's financial plan does not need to depend on the bull case. And so here's the question that cuts through everything that we're talking about. If NAVN exposure arrived as cash today, how much would you choose to reinvest back in the NAVN stock? And that question removes loyalty. It removes familiarity. It removes inertia. And if a family would not buy this much NAVN with fresh cash, then holding that much through equity compensation may not be true conviction. It may just be the default behavior. This is why the equity strategy does not require a negative view of NAVN. We can say NAVN is a promising and still reduce exposure. We can respect the company and still diversify elsewhere. We can keep upside without letting one stock dominate your overall plan. So the planning framework is not sell everything because NAVN is bad. And it's definitely not hold everything because NAVN could be the next great thing. The practical framework is this. Evaluate taking meaningful risk off the table. Keep only the upside that your family intentionally wants, and then reassess NAVN exposure at every future RSU vest. This is educational only based on public information reviewed as of the planning date, does not rely on material non-public info, and is not legal, tax, investment advice, and any forward-looking discussions hypothetical. Actually, results may vary, blah, blah, blah. Make sure you do your due diligence before acting upon everything and not just on this video. Thanks for watching, and I'll see you next time. And NAVN may be a very interesting company, but one interesting company should not quietly become your entire financial plan.